Hi viewers, I am Dr. Velavan, Faculty School of Management, Sastra University. First of all, I welcome you all for this session. To the continuation of the previous session, now we are going to solve some problems in input tax credit. In the last class, the last session, we discussed what is input tax credit, who are all eligible to claim input tax credit, what is the mechanism, and also some blocked credit. Whenever or wherever or what type of supplies are not eligible to claim ITC. So this is what we discussed in the previous session. So now we are going to discuss about the computation part. Okay, please wait. Yeah, see. Rule 42 is given manner of determination of ITC. So how can we claim ITC? How can we calculate and claim ITC? So here we have to follow 4 steps. Step 1, Step 2, Step 3, Step 4. This is standard formula. It includes 4 steps. Step number 1, common credit. Common credit. Step number 2, ineligible credit. Step number 3, eligible credits. Step number 4, restrict ineligible credit. So what is common credit, what is ineligible credit, what is eligible credit, what is restrict eligible credits, everything we'll discuss one by one. You see, here you have to take total ITC involved on input and input services. ITC involved on inputs on goods and inputs services, or input goods and input services. So here you have to take the total ITC is credited in your account. Because I already told you, once you registered your business, immediately 3 ledgers are open. One is electronic cash registered, electronic credit registered, electronic liability registered. These are all the 3 ledgers are opened mandatorily when you complete the registration process through online. Because in GST practice, no manual work and all. Manual process is not available, it's not applicable. You have to do everything through online. This is what very important. So here you have to take 100% of your inputs on goods and input tax on goods and input tax on services. It denotes T. turnover. Total turnover. T. Here you have to take total input tax have been credited in your credit ledger, electronic credit ledger. Okay. Less tax on goods or services used for this non-business. When you buy goods for non-business purpose, and that time also you have to pay ITC, but this ITC is also credited in your account. So here what purpose you buy the goods, it's not a matter. What is your total purchase? How much you paid so far? This is very, very important. Later on, you have to classify your turnover. This is for business, that is for non-business, that is for exempt, that is for block. Likewise, you have to divide. When? After complete the process of payment of input tax. First you pay tax, then we'll think about the adjustment and the settlement, etc. So here tax on goods or services used for non-business. So how much of the amount of input tax you paid for goods purchased for non-business, because you have a record. Simply you can able to take this value from the total turnover or total goods purchased. Okay. So T denotes this symbolic item, total input tax, not turnover, total input tax, T. Total input tax is T, not total turnover. I think I have mentioned wrongly, it is total turnover, no, total ITC. Then tax on goods or services used for exempt supply. So how much you paid? On goods or services for exempt supply. So how much you paid for non-business? This is T1. How much you paid for exempted supplies? T2. Because whatever may be the supply, you buy goods, at the time of purchase you have to pay input tax. This is mandatory. Without paying tax we can't buy anything. We have to pay tax. Then you decide whether you are going to use this product for further business or your personal use. So when you decide it is for personal use, so now it comes under this category, non-business. Or you are going to use the same product in your business, this is for business. Or you buy exempted goods, so far it is not necessary to pay tax, exempted. So here also you have to pay, input tax you have to pay. T2, blocked credit. You last session we discussed what is block credit. T3. So T is for total input tax. Non-business, I mean tax on input tax and non-business, T1. Exempted supplies, T2. Block credit, T3. So these are all the classifications we have to make in step 1 first. So how can you identify it? They will give in the problem how much they bought for business, non-business, from exempt supply, for block credit, everything they give. So this is ITC credited in electronic credit ledger. You see. So total less all, the balance only will be credited in your electronic credit ledger. So you assume that electronic credit ledger. Here by ITC. That's all. This is debit, this is credit. So this one, this is what? So you take the total ITC paid, subtract ITC for non-business, ITC for exempt supply, ITC for block credit. The remaining will be credited in your account. Now, again you have to deduct ITC on input and inputs are used for taxable supplies. T4. This is total amount credited in your electronic credit ledger. From this amount, how much is for taxable? Because it has to be paid directly without any adjustment. So T4, the balance common ITC available for apportionment. Common means what? This is for some other. Common. I mean exempt and blocked. Okay. Because both are included in your business. Because you may sell some exempted goods, you may sell some taxable goods, but here your total turnover will be considered as aggregate value. That's why this credit is available for apportionment. So common ITC available for apportionment is C2. So T, T1, T2, T3, C1. C1 is actual amount of ITC credited in your electronic ledger. C2. Now step number 2. Ineligible credit. Credit meant for exempt supply. This is D1. So here credit meant for exempt supply. E is exempted turnover. F is total turnover. And C2. This value will be taken. Whatever amount, this is called D1. D2, suppose you have a non-business, so you directly calculate 5% on C2. This is D2. So take aggregate value of these two. This is what in eligible credit. So C2 minus this one. These two. Now you get eligible credit C2. So C1 is for total amount credited, C2 is for apportionment credit, then D1 ineligible credit, for exempt supply, then ineligible credit for non-business, then finally eligible credit C3, C2 minus D1 plus C2. Restrict ineligible credit, restrict, again you have to add these two, add D1, D2 to output tax. That's it. This is what we have to calculate based on the problem. Okay. Now you see the problem. From the following information of Shabarish Limited, determine the amount of ITC. Total credit in a month 2 lakh. Credit pertaining to exempted supply 30,000. Credit pertaining to blocked service 20,000. Credit pertaining to taxable supply 50,000. Okay. Credit pertaining to non-business nil. Exempted turnover 3 lakh. Taxable turnover 5 lakh. So they have given in detail regarding ITC for all total, exempt, blocked, taxable and non-business purpose also. So this is for what? T. Non-business T1, exempted T3, blocked T4, likewise you have to T1, T2, T3. T1 is non-business, so T, this is T, non-business T1, exempt T2, blocked T3. Blocked, where is blocked? T3. That's it. T1, T2, T3. And apply the remaining formula. Total credit amount 2 lakh. Credit pertaining to exempt supply 30,000. Pertaining to blocked service 20,000. Pertaining to taxable supply 50,000. Non-business. So exempt, blocked, taxable, non-business. Total. Here exempt turnover 3. So total turnover 5. Okay. Now we see determination of ITC. Common credit. Total ITC D. Tax on goods or services used for business purpose T1 nil. Tax on goods or services used by exempt T2 30,000. Blocked credit T3 20,000. So ITC credit and electronic ledger C2. So deduct all the 3 2 lakh. 3 from 2 lakh, so 150. Less ITC input and for taxable supplies T4. Okay, this is T4. Now you deduct T4 from ITC credited, so a portion credit will come 1 lakh. C2. Now you calculate ineligible credit, credit meant for exempt service, 3 lakh exempt, 5 lakh total. So 3 by 5 into C2, 60,000. They have a non-business purpose, so even it is available or not, you calculate 5% on C2, 5,000, so total 35,000. So restricted 65,000. It should be added to with output tax. So this is the way of calculating or determination of ITC. Hope you could understand. So you have to classify the input tax. Total is T, exempt T1, non-business T1, exempt T2, block T3, taxable T4. All the 4, 1, 2, 3, 4, 5s are very, very important. Total, non-business, exempted, then taxable, blocked taxable. Okay. Now you see the answer is 65,000. Here you have to understand properly, then you calculate. Okay, hope you could understand. You see here we have applied the formula directly. You have to understand, memorize this formula. Whatever the informations are given in the problem, you have to incorporate all the information in the formula. The answer will come. Okay. Next problem. Bata Footwear manufacture of 2 varieties of Hawaii slippers and 5 varieties of other sandals and shoes. Hawaii slippers are exempt. Okay. Dyes are used in the manufacturing of footwear. However, bright pink is used only on the Hawaii varieties. The black is used for the sandals and shoes. Blue and yellows are used for all the varieties. Brown is used for non-business. So brown non-business. Dyes are used in the manufacturing of all footwear. Okay. Bright pink used only for Hawaii varieties. Hawaiis are exempted. Which one? Bright. So this is E. This is E1. Black is used only for sandals and shoes. Sandals and shoes. Blue or yellows are used. All the varieties. Brown is non-business. Hawaii slippers are exempted. Okay, good. T2. Pink is used for Hawaii. Input tax on black dye, blue dye, yellow dye. Food and beverages exempted. blocked credit. This is food and beverages T3. Others are T4. That's all. Turnover of two varieties 3 crores and all varieties taxable 5 crores. This is the problem. So here you read the problem carefully, understand. It's a footwear company, manufacturer of 2 varieties of Hawaii slippers and 5 varieties of other sandals and shoes. Hawaii slippers are exempt. Ties are used in the manufacturing of all footwear. Then, however, bright pink is used only for one of the Hawaii varieties. Pink, bright pink. Hawaii varieties is fully exempt. And black is used only for the sandals and shoes. That's it. Blue and yellows are used for all the varieties. So taxable. Brown is used for non-business purpose. So T1. So what is T? To add all, T will come. See the answer. Total ITC 2,65,000. You see. 10, 1 lakh, 140, 240, 250, 260, 2,65,000. Tax on goods, non-business, 10,000. Exempt 90,000 people. Blocked credit, food and beverages 10,000. So total electronically 155. Taxable 40,000. Black tie. Black tie is taxable. Hawaii varieties. No. Ties are used for manufacturing footwear. Blue and yellow, so black automatically. Sandals and shoes. 40,000. Taxable supplies 40,000. 40,000. T4. Because blue and yellow dye are used for all the varieties. All the varieties means here it includes both the taxable as well as exempt. So this is T4. This is also like that. So they should be for apportion credit. You see. So apportion 150. 1,01,000. Okay. Now you have to apportion. Ineligible. Credit means so 3 by 115 and credit meant for exempt supplies because it includes this 1,15,000 also. Because here they use brown, sorry, where? Yes, blue, T, yellow are used for all the varieties. Blue and yellows are used for all the varieties. So both exempted and taxable. Both exempted and taxable. Okay. So here apportion will be made. So 3 lakh by 5 lakh into 115. Yes. So 69. Non-business 5% of proceed to 5%. So deduct these two from 115. Then you take these two for for restricted. This should be added with total output X. So this is the way of calculation of ITC, my dear students. Okay, first you understand what is ITC and how can we claim. This is a format we have to use to claim ITC. Okay, hope you could understand. Next, manner of determination of ITC for capital goods. A. Capital goods for non-business exempt. Capital goods exclusive use for taxable supply, electronic ledger. Goods, capital goods use taxable and exempt supply, life should be up to 5 years. The capital goods used for taxable exempt supply, but earlier used non-business or exempt. So ITC minus 5% of the quarter. Capital goods, because you have to charge depreciation for each quarter. Okay. Capital goods for taxable and exempted supply, not applicable. Okay. Then common credit, ED, ABCD, then C plus D plus E, common credit. Electronic ledger, computation of tax liability, monthly ITC, common credit, monthly and total. Capital goods used for taxable and exempted supply existing. Then apportionment. That's all. This is this formula is for manner of determination of ITC for capital goods. Capital good means asset, fixed assets, depreciable assets, everything. You see, X Limited provides you. So outward supplies taxable 25 lakh. Outward supplies exempted 20 lakh. So total 45 lakh. Inward supply of capital goods for September 2018. Purchase of capital goods to be used exclusive for taxable supply 20 lakh. Exclusive for exempt supply 10 lakh. Others 15 lakh. So total 45 lakh. This is a problem. Note number 1. Company purchased capital goods on 1/1/18 for 5 lakh for exempted and taxable supply both. So when you buy exempted and taxable usage, so here apportion credit is applicable. Company purchased capital goods on 1/7/18 for 2 lakh intended to be used exempt supply only. However, from 1/9/19 these capital goods are used both. Okay, no problem. Company purchased capital goods on 1/7/18 for 8 lakh for taxable supply purpose. However, from September 18 these capital goods are to be used for both taxable as well as exempt supply. GST applicable rate is 18%. All values are exclusive of GST. No problem. Good. So you see, now we have to discuss section 18. ITC in special circumstances. ITC for newly registered person. Conditions and restrictions. If applied for registration within 30 days from the date on which he become liable for registration, once you registered your business or once you apply for registration within 30 days from the date of liable for registration, you are eligible to claim ITC. That is very, very important. The basic criteria is your business should be a registered business. You are the taxable person. You transfer taxable goods only. So ITC available on input held in stock and input contained in semi-finished and or finished goods on the day immediately preceding the date from which he becomes liable to pay tax. Suppose you have a stock, even you have a stock or finished goods, you need not worry about that. You are eligible to claim ITC. In the case of voluntary registration, ITC is available on input of stock and input contained semi. Yes, no problem. You need not wait for your threshold limit for registration. Suppose you registered your business voluntarily, you are also eligible to claim ITC. If a composition levy scheme is ceased, ITC available on input held in stock and input contained in semi-finished and finished goods and capital goods on the day immediately preceding the date of grant of normal registration, provided the credit on capital goods shall be reduced by 5% per quarter. That is very, very important. The credit on capital goods shall be reduced by 5% per quarter. Here also, but the composition levy scheme is ceased. When you have a composition levy, you are not eligible to claim ITC. No ITC for compensation levy scheme. Exempt supply becomes taxable supply, applicable for existing registered person. Okay. This is also same. ITC is not available after the expiry of 1 year from the date of issue of invoice. So you have to claim within 1 year. That is very, very important. So after the expiry of 1 year from the date of the issue, expiry, not available after the expiry of 1 year from the date. From date of expiry, 1 year, you are not taking any steps to claim that one. So automatically invalid. Transfer of utilization, transfer of utilized ITC by transferor to transferee in case of changes in the constitution on account of sale, merger, demerger, amalgamation, lease or transfer. No problem. At the time of merger and demerger, amalgamation, the ITC transfer is possible. If registered person opt composition levy or where the supply become wholly exempt, he shall pay an amount equal to ITC valid input held in stock, the input containing semi-finished goods and immediately preceding the date that is eligible. Even though you are opting or you opt composition levy, but you have some stock machinery and all, or finished goods and all, semi-finished and all. So here you can claim ITC because you paid ITC, input tax for that product earlier. Okay. But here you have to reduce 5% every quarter. The balance left in electronic credit ledger, credit balance after the payment provided. That is very, very important. IT is available for 1 or amount refundable for 4 is calculated as per prescribed method. Okay. Supply of goods, pay an amount whichever is higher of the ITC is taken 5 per quarter, or the tax on the transaction value of such capital. So these are applicable for only capital goods. Okay. However, in case of refactory bricks, molds and dies, jigs and fixtures, when these are supplied as scrap, the person can pay tax on the transaction value. Because here we cannot find out the actual cost of production. That's why we take a transaction value for ITC. Okay. Problem. Swastik Private Limited is a manufacturer of taxable goods. It purchased a machinery for 8 lakh on which IGST of 14,400 is paid. The company has claimed depreciation under the Income Tax Act 1961 on the value of full value of machine, that including GST composition. Here, no ITC for depreciation. Already I told you. Okay, no ITC for depreciation. The answer, no ITC is eligible for depreciation on GST claim. Okay, good. So answer is nil. ITC is not applicable for depreciation. Because the company has claimed depreciation under the Income Tax 1961 on the full value of the machine. You see. So here ITC is not eligible. Sigma Consultant, an LLP of finance professionals, provide financial consultancy services. It made an advance payment of 1,18,000 inclusive of GST 18% in the month of October to Asurav Computer Services for developing software. Okay. The software would be used by the LLP to enhance the precision of the financial advice given by it to various clients. The balance payment is to be made after the successful test run by software in the month of December. Okay. Sigma Consultants has availed ITC of IGST 18,000 in the month of October. Do you think Sigma Consultant can avail ITC? Examine the scenario with reference to relevant legal provisions. So ITC is available in the month of receipt of services. In this case, advance only paid, hence ITC is not available. You see here they have given advance payment only inclusive of GST. Suppose they have not paid advance payment without GST, now the ITC is not applicable, but they have paid inclusive of GST, so no problem. Okay. ITC is available in the month of service. In case the case advance payment only paid, hence ITC is not available. Only paid, but inclusive of IGST, here it is eligible. A taxable person is in the business of information technology. He buys a car, maximum seating capacity 5. For use is excuse executive director. No. Can be covered. No. although it is 5-seater, it is used for only for employees. Executive director only is going to travel. So no ITC here. Okay. Yes. A technical testing agency tests and certifies each batch of machine tools before dispatch by BMT Limited. Some of these are dispatched to a unit in special economic zone without payment of GST, but not taxable. The finance personnel of BMT want to know whether they need to carry out the reversal of ITSC and reversal of ITC. Okay, ITC is available, supply to is zero rated supply. Even it is zero rated, it is allowed. Now you read and understand the two problems and tell me, or put in a chat box when you study, when you watch. AB, a registered person, was paying tax under composition scheme up to 30th June. However, with effect from 31st July, AB becomes liable to pay tax under regular scheme. Is AB eligible for any ITC? Yes, he is eligible because he is a registered person. But when you switch over the scheme of payment, like from composition to regular scheme, you are eligible. Change over the scheme is possible. And basically AB is a registered person. So automatically he is eligible to claim ITC. Okay. Babla Enterprises is exclusively engaged in making exempt supply of goods. Thus not registered under GST. But even it is not registered, he is eligible to claim ITC for stock. On 1st October, the exemption available on goods gets withdrawn. On that day, the turnover of Babla 50 lakh. Examine eligibility. ITC is available for input of stock only, as supplier is not a registered person. Clearly they have mentioned it is not registered under GST. On 1st October, the exemption available on goods gets withdrawn. Okay. On that day, the turnover of Babla Enterprise was 50 lakh. Examine the is possible. Is eligible to avail ITC for input in stock. Mamta Traders links trades in exempted goods and provides taxable services. It is registered under GST on 1st October. The exemption available on its goods gets withdrawn. Analyze the scenario and determine the eligibility of Mamta Traders links for availing ITC. If any on input and or capital goods used in the supply of exempt goods is available, because stock, even you are a registered person or unregistered person, you are eligible ITC for stock and capital goods. Stock and capital goods. So see, the answer is ITC is available for input in stock and capital goods as supplier is a registered person. Here he is a registered person. Even he is not a registered person, he can claim ITC for both stock as well as capital goods, because it is applicable. It is applicable. Okay. So you see, we have some problems regarding ITC. So what we discussed so far, once again we have to touch all. We discussed rule 42, manner of determination of ITC. So here you have to classify goods into the following: how much you are using, non-business, exempt, block and taxable. And also you have to follow 4 steps: step 1, step 2, step 3 and step 4. Step 1 for common credit, step 2 ineligible credit, step 3 eligible credit, step 4 restricted ineligible credit. It denotes and total ITC is for T. ITC on goods or services used for non-business T1, exempt supplies T2, blocked credit T3, taxable supplies T4. Because here we used T, C and D. In C, C1, C2, C3. In D, D1, D2. So you have to memorize this formula, because this is very, very important. We directly use this formula to calculate ITC. Okay, so we solve this problem. Total credit in a month rupees 2 lakh, but credit pertaining to exempt supply rupees 30,000, 20,000 is for blocker service, 50,000 is for taxable service. No non-business, even non-business, even they don't have a non-business supplies. Goods for non-business, personal use, they have to calculate D2. Okay, because 5% directly on C2. Okay, you see, this is what we discussed so far. Total ITC involved on input services. Okay, this is what. This problem is very, very important. Back up, feedback. Okay. So this is a portion. So So you solve all the problems. Okay, it is available in the video, and will upload the PPT later. But you take one paper and solve all the problem individually. So whenever you have a doubt, and that time you refer the video, watch the material and watch the video. They will help you to solve all the problem, and get the information from the internet. All of you download GST app in your cell phone whenever you have a time. Okay, sign in and read the information. Read about the sections, rules which are available in GST. We are giving some snapshot, that's all. Tips you have to develop with your own intelligence and your own language, talent, knowledge. Okay. Then this is the answer for that question. ITC. It's a very important question. Then ITC for capital goods. It is a little bit different from the non-capital goods. I mean operating items. Purchase. So A, B, C, D, E here. So these steps will be followed to calculate ITC for capital goods. Okay. Because in capital goods, whether you registered or not, you have a stock and finished goods or machinery, you can eligible to claim ITC. And also we discussed ITC in special circumstances. A person who liable for registration, who has taken step for registration within 30 days from the date of liable for registration, whether he is eligible to claim. Yes, he is eligible to claim ITC. When they have a transactions in between the date of liable and date of registration, it is possible. And also discussed some other cases, special cases. Okay, you see, and they solve some problem. The next session we will solve the detailed problem for ITC. Okay, I will give one by one, don't worry. So once again I request all of you, you have to watch the videos compulsory, because it is very tough paper. Tough in the sense practically using paper. So you have to study thoroughly. Unless otherwise you will not use. So I will finish this session now. The next session will be start from here only. Okay, so we will meet in the next session. Okay, thank you, bye. it.